Hey, and welcome back to Let's Talk Forex with Alison and Chris. This week we're talking about gold and its correlation with currency pairs. It's especially interesting given gold's recent all-time high, and we wanted to look not just at which currency pairs gold are traded with, but also why gold is an all-time high. And I think it's a really interesting conversation about the fundamentals and how we're seeing things shift in the markets. As always, if you have any questions, just get in touch with us. You can reach us at podcast@fxscouts.com or get in touch with us on social media. We're on Facebook, LinkedIn, YouTube, Twitter, we're everywhere. Thanks so much and enjoy this week's episode.
Hey, Chris, how are you doing today?
Yeah, I'm pretty good, Alison. Can't complain. Sun is shining. Yeah, I'm pretty good.
Yeah.
How are you doing? You okay?
Yeah, doing very well, thanks. We had a lovely week and weekend. Yeah, sun is still shining here, surprisingly. Although it is getting a little bit chillier.
I was going to say it's going to start changing soon, right?
Yeah.
It's that time of year.
But the weather's been so weird. I mean, we were talking the other day to Björn and Marlon and Ida that work with us, and they live in Sweden, of course. And they were saying it was still snowing last week.
Yeah. No, that's. I mean, that's brutal. Yeah. I can't imagine. No. Yeah. No, I love Sweden. Sweden's a lovely country. The Swedes are lovely people, but man, their winters. I could not do that.
No. Yeah, I can't even imagine it.
No, you don't want to imagine it.
Yeah, well, in today's podcast, as we mentioned last week, we're going to discuss gold and currency correlations, and particularly the correlation with the Aussie dollar. And then we're going to talk a little bit about current gold prices and what's influencing its recent all-time highs. And then we'll talk a little bit about strategy. We're not going to go too in depth in the strategy side of things, but just sort of, how you can trade, understanding these correlations.
Yeah, exactly. It's an interesting time to be talking about gold. As you said, it's got recent all-time highs, and some of these correlations are not so strong anymore. I mean, things seem to be changing a little bit, and we can talk a bit about that as well. But before we jump in, you're going to be asking yourself why it's important to understand the relationship between gold and Forex prices. Well, the main reason is the accessibility and cost effectiveness of the Forex market compared to the gold market. So if you want to get involved in trading gold, it's actually, if you understand the correlations, you can actually use Forex as a proxy for trading gold once you understand these correlations. And then you can benefit from higher leverage on Forex pairs and also easier market access. The Forex market's much more liquid. So you can still keep an eye on gold prices and trade these correlations with gold without having to trade gold itself. And additionally, once you understand these correlations, you have benefit of being able to hedge your positions, which is another main reason why people trade gold.
Yeah. One of the most sort of closely correlated pairs is the Australian dollar. So it's always been historically probably one of the most positively correlated currencies with gold. And it's got a current correlation of 0.44. This sort of changes all the time, but that's sort of currently what it's at. And this correlation occurs because basically Australia is the world's second largest gold producing country after China. And it's also the reason why the Aussie is known as a commodity currency. And as I said, this correlation is not absolute, but overall, when gold prices move higher, the AUD-USD will shift to the upside, and when gold falls, they'll move to the downside too. They are, in general, they're very positively correlated.
Yeah, they are very positively correlated. The correlation has become weaker in recent years, I've noticed. But traditionally, there's a really strong positive correlation between gold and the Aussie. Conversely, the US dollar has an inverse correlation with gold prices. And this is mainly due to because, so much of gold trading happens in US dollars. So when you're buying gold, you're going to be buying in dollars. So when you've got an expensive dollar, you can see gold prices will drop, demand will drop. So with the US at the forefront of recent interest rate hikes, the dollar's strength has led to a decline in gold prices. So you saw this over the course of last year. However, as interest rates move lower, gold becomes more attractive and as the dollar weakens. And among major USD pairs, the USD CHF actually has shown the strongest inverse correlation. So it's got an average negative correlation of minus 0.52, which is actually really powerful negative correlation. And then, so it's got that's the most correlated among the major pairs. So so when the gold price rises, you'll tend to see the USD to the Swiss franc, the USD CHF will fall down. Yeah, and I think that's a good brief overview of how currency pairs are correlated with gold. But let's take a quick break here, and then we're going to talk about why gold has been hitting an all-time highs recently.
Hey guys, hope you're enjoying the episode. If you're looking for more trading education, visit our website or FX Scout's YouTube channel. We have plenty of resources available. And if you're looking for a good Forex broker, go and check out our broker reviews on fxscouts.com.
Yeah, we provide an in-depth analysis of each broker, highlighting both their pros and cons. And you can always write to us as well. We're happy to answer any questions. You can get to us at podcast@fxscouts.com. And now let's get back to the episode.
Yeah, and we're back. So as you say, Chris, there are different pairs that are negatively correlated with gold, the dollar being obviously one of the main ones. But another factor to consider is that gold is traditionally seen as a safe haven in times of conflict. And last year we saw gold sitting at around $1,820 per ounce before Hamas invaded Israel on the 7th of October.
Mm-hmm. Yeah, and then that outbreak of conflict, it was a real shock as well. I don't know if you remember, like nobody was expecting this. And Israel their intelligence community is usually very good at predicting Hamas movements or any movements against them. So that's why this was such a surprise. So it changed everything in terms of gold anyway. Gold benefited really strongly from its status as a haven asset, especially in those early weeks of the war. It was also simultaneously, it was around this time that markets started to believe that the Fed's war on inflation was ending. And this led to a weakening of the US dollar throughout October. And that weaker US dollar combined with the possibility of a wider Middle East conflict really turbocharged demand for gold, with prices climbing to over $2,000 by the end of October. So you think like the price rose about 10% in less than a month, which is really quite something.
Yeah, I mean, it really was. It was sort of ranging between 1,600 and 1,900 for most of 2022, 2023. So that was a huge increase. And as 2023, drew to a close, and the potential for a wider conflict in the Middle East seemed to fade, the weaker dollar continued to support gold prices, and it peaked at over $2,080 by the end of December.
Yeah. And then we saw in early 2024, just a few months ago, we saw the prices tend to be stuck in a range. And I think a lot of this is to do with the currency markets as well. I mean, we've talked about this previously earlier this year. There's very low volatility. There's very low trading volume across Forex pairs. And so gold, I think, seemed to follow the same pattern. Optimism for lower interest rates in the United States had faded because the data showed that inflation was still really sticky and that the US economy was somehow the US economy is still in incredible health.
Yeah.
And then that conflict in the Middle East, which have been, they've been keeping prices high, was showing no signs of abating, but it didn't evolve into a wider war. So the price, didn't fall much below the 2,000 mark. And, but at the same time, there was a lot of demand, and there still is a lot of demand from central banks, and still a lot of demand from China. And Israel's assertive response to the Hamas invasion was continuing. So conflict, wider conflict was certainly not off the table. And there was other factors supporting the price, but it wasn't really breaking out of that range.
No, but since February this year, gold really has resumed, it's, as I said, more remarkable. I guess this is more remarkable because it has continued to rise in the face of a strong dollar. As we were saying, they're usually very negatively correlated because you buy gold with dollars. But, initially driven by speculation and governmental and institutional demand, The bull run picked up steam in April, and this was when Iran was drawn into a direct conflict with Israel.
Mm-hmm.
Yeah. So, as we saw earlier in April, I think it was the 12th of April, that gold price hit an all-time high of $2,431. Haven't quite got back there yet, but it was absolutely, unbelievable when it hit that price. And again, as you were saying, this was in the face of, there wasn't a weakening in the dollar. So it was quite a surprising development.
Yeah, it was. And there's a wider conversation to be had here as well, about Chinese buying and retail demand and central bank buying of the US dollar. So sure, we can say, look, this threat of a wider Middle East conflict, that's certainly led to this price spike. But this constant support in the face of the US dollar strength shows that there is fundamentals here that are changing slightly. You're seeing central banks, I think they're trying to diversify away from US dollars, and they're trying to get more gold in their portfolios. And I think a lot of retail investors, at times of conflict in general, I mean, anybody can look outside right now, and geopolitically, the world's a bit of a mess,
Yeah, absolutely.
You got Russia, Ukraine is bubbling on. You've got this Middle East conflict that doesn't look like it's going away. There's a lot of uncertainty in the markets. So institutional, governmental, and retail buyers are going to move to gold in times like these. And I think that's probably why we're seeing this divergence away from this negative correlation with the US dollar, because people are like, I don't really care that the US dollar is expensive right at the moment. I just want to have gold because I'm worried about the way the world is going. So it's a really interesting fundamental backdrop. But yeah, so we hit that spike in 24.31 on April the 12th, but price has fallen since then. And I think the lull in the Middle East conflict has provided a backdrop for this. And USD strength also seems, constant. It's always there. And as I said just now, people may be buying in the face of it, but it is still very much a factor. But yeah, we're kind of in uncharted waters here with gold at the moment. The recent price movement is unprecedented, and it's really increasingly difficult to bet against a further increase in price. I saw FBS, is one of the brokers who we work with at FX Scouts, just published an article last week with their analysts saying that they are expecting gold price to hit 2,800 by the end of this year. Now,
that's crazy.
That's crazy. And I think they're probably wrong. But I'm also slightly wary that I'll have to eat my words, because it's unprecedented right now. We're kind of, like I said, we're in uncharted waters. So who knows where we go from here.
But it's also interesting. The dollar is also known as a safe haven. So you wonder if that's also playing a bit of a part here, where people are sort of hedging their bets in gold and the dollar simultaneously.
I'm sure there's that. Yeah, no, it's, So where's gold going to go to next? I don't know. I mean, the technicals, I think we're just looking today, show that it's probably due a downturn, which is unsurprising considering the price. But the fundamental backdrop here, Israel is gearing up for an invasion into Rafah in the south of Palestine. Iran is not going to like that at all. No. And the Ukraine-Russia conflict seems to be heating up again. So, so don't hold your breath and wait for gold to fall anytime soon.
And, just in terms of the dollar, I wonder what's going to be happening with interest rates as well. If the US does start to decrease interest rates, that'll also give a bit of a backdrop to higher gold prices.
It could. I mean, again, don't hold your breath for lower interest rates either. But
inflation's looking quite sticky still.
Yeah, so, it is. So I think we're probably gonna have to wait a while for lower interest rates in the US.
Yeah, well, given this sort of backdrop to the correlation of gold and the various currency pairs, a question we are often asked is what strategy you can use to trade. And the most common strategy is pair trading. So pair trading refers to simultaneously buying an asset and selling a positively correlated asset or negatively correlated asset at the same time, depending. And it's basically best used when a trader identifies a correlation discrepancy. So because you often see two assets move in the same direction if they're positively correlated, you would use the strategy when this correlation falters. So if you see that the pairs usually move in the same direction and suddenly they're not, you might find that they'll then become, it'll then correct, and that's when you'll make a profit. So this is often a strategy that traders use. But again, you've got to be quite aware of what's happening at the moment. And like we spoke about a couple of weeks ago, you've got to be flexible with your strategy and flexible, with the fundamentals, because the markets do change.
Yeah. It's good. General advice. I agree. Like with gold and let's say the Aussie to the US dollar, 100%. But yeah, you do need to be aware of the broader fundamentals, which we just went over right now. But in this example of pair trading, if the correlation breaks, let's say because gold price rallies and the Australian dollar doesn't follow along, then you've got an opening here, you've got an opportunity. And this divergence can be exploited by shorting gold while simultaneously going long on the Australian dollar, US dollar. So once the value of both gold and the Australian dollar revert to the statistical mean, then you're going to make your profit. So yeah, it's a really simple trading strategy. It's a good one to use with gold correlation. So, but check it out. And like I said, be aware of the fundamentals. And then the other really important about with understanding gold correlation is using it for hedging, as we said at the top. It's a really fantastic hedge. And I think most traders will probably use it for that. But again, you'll need to understand the correlation and keep an eye on the fundamentals if you are going to use it to hedge. Yeah, so I think that about wraps it up for gold this week, Alison.
Yeah, I think it does. I mean, if you have any questions about gold or any of the currencies that are correlated with gold, please don't hesitate to send us a question to podcast@fxscouts.com.
That'd be great.
And then next week, we're very excited to talk to a professional trader, Neil Bateman. He works alongside Caroline Rundle, who we interviewed earlier in the year. And she's the owner of Trading Angel, and she's a trading coach. So we're very excited to chat to him about his trading journey and just hear, how he started. And, he's also a trading coach, and we just want to hear how he became a trading coach, what strategy he uses, and what advice he can give, traders that are starting out or whatever on their trading journeys too.
Yeah, it's going to be really good because everybody's trading journey is different, and I never tire of hearing how they started out and how they got to where they were, especially when they're successful. Yeah, so really looking forward to that. Good. I'll speak to you then, Alison. Have a great week.
You too. Thanks, Chris.
Bye.